Hey everyone, it's Abdiaziz Ahmed, and let's talk about something pretty major happening right now in the world of cryptocurrency. Look, I don't have to tell you that things haven't been great in the crypto markets. Actually, scratch that. Things have been pretty ugly. Bitcoin is down, XRP is down, Ethereum, Solana, Cardano, pretty much everything took a tumble this week. And this isn't just a blip, guys, we're talking some serious red across the board. So, the big question everyone's asking is, why? What's causing the crypto market to go down right now? Is this just a temporary dip, or are we looking at the start of a full-blown crypto winter? Well, in this video, we're going to break down the 4 biggest reasons behind this recent crypto crash, and more importantly, what it means for you as an investor. So, if you're invested in crypto, thinking about getting in, or just curious about what's going on, you need to hear this. Alright, so the first thing we need to talk about is the overall market sentiment, and frankly, it's not looking too hot right now. See, the crypto market doesn't exist in a vacuum, it's connected to the global economy, and right now things are a little shaky. We've got rising interest rates making borrowing more expensive, which slows down businesses. Inflation is still stubbornly high, eating away at everyone's purchasing power. And to top it all off, we've got geopolitical tensions and conflicts around the world, adding even more uncertainty to the mix. This perfect storm of bad news makes investors nervous. They start pulling money out of riskier assets like stocks and crypto, and they flock to safer havens like bonds or even just holding cash. It's the classic flight to safety move that we see time and time again when the economy gets a little wobbly. So, when the stock market sneezes, crypto tends to catch a cold, and that's a big part of what we're seeing right now. The next factor contributing to the crypto crash is the strength of the US dollar. The dollar is like the King Kong of currencies. When it moves, everyone pays attention. And recently, the dollar has been flexing its muscles. A strong dollar means that other currencies, including cryptocurrencies, weaken in comparison. Think of it like a seesaw. When one side goes up, the other side goes down. So as the dollar gains strength, it creates downward pressure on crypto prices. Why is the dollar so strong right now? Well, it's seen as a safe haven asset during times of global uncertainty. Plus, the Federal Reserve raising interest rates makes the US a more attractive place to park money for investors seeking higher returns. This all adds up to a stronger dollar, which unfortunately for crypto, translates to downward pressure on prices. Let's not forget that the crypto market is cyclical. It goes through periods of boom and bust, and after the incredible bull run we saw in the past few years, some people are taking profits. Early adopters who bought Bitcoin at $10,000 or Ethereum at $1,000 are seeing massive gains. And when you're sitting on life-changing profits, it's only natural to want to cash out some of those gains, diversify your portfolio, and maybe even treat yourself a little. But here's the thing, when a lot of people cash out at the same time, it creates selling pressure. And that selling pressure can push prices down even further. This is especially true in the crypto market, which is still relatively small and volatile compared to traditional markets. So, while some profit-taking is normal and healthy for the market, a large wave of selling can definitely contribute to a downturn like we're seeing. Now let's talk about the elephant in the room regulation. Governments around the world are starting to take notice of the growing crypto market, and they're not all happy about it. They're concerned about things like money laundering, tax evasion, and the potential for crypto to be used for illegal activities. So we're seeing governments introduce stricter regulations, and in some cases, even crackdowns on certain cryptocurrencies. For example, China's ban on crypto mining and trading sent shockwaves through the market, and the SEC's ongoing lawsuits against major players like Binance and Coinbase have created a lot of uncertainty and fear. This uncertainty makes investors hesitant to jump into crypto, and it can lead to people selling their holdings, further driving down prices. So, what does all this mean for you? Well, if you're new to crypto or you've been thinking about investing, this might seem like the worst time to get in. But here's the thing, smart investors don't follow the crowd. They don't panic sell when prices drop. They see opportunity where others see fear. Think about it. Would you rather buy a house when prices are sky high, or when they've come down and are more affordable? Crypto is no different. When prices are low like they are right now, it could be a good time to start building a position in projects you believe in for the long term. Of course, this is not financial advice, and you should always do your own research and invest responsibly. Never invest more than you can afford to lose, and if you're unsure about anything, talk to a financial advisor. Stay informed, stay safe, and as always, thanks for watching.